90% of the people that watch my videos aren't subscribed, and that is very sad. So if you haven't clicked the subscribe button below, make sure that you do. And for you doing that, I'm gonna give you guys a free gift. I made a brand new Forex training that is 100% free. All you have to do is click the link in the description. And as well with that, make sure that you follow me on Instagram. And if you have any questions or concerns about trading, shoot me a message. Let's see how I can help you guys out. And without further ado, let's get in this video. If you guys are looking for a program on how to learn how to trade Forex, this is your opportunity. At least be open-minded. Check out my website. It is rorfx.com. And there also is a link in the description where I do have a promo code if you do sign up. Now, I want to go over US 30. Today was Friday, April 29th. Wow, April went by very quickly. I want to give you guys kind of a bias on what happened, and it's really crazy because Fridays are known as days where the market sells off, especially with US 30, and that's exactly what we saw happen. So after the false breakout, we did see a drop all the way down here to this support with the total of 9,500 pips, which is absolutely insane. That is not very common for the markets to do that, to drop 9,000 pips within one day. So today was a phenomenal day in the markets, and I want to give you guys a bias on really what happened, how to overall read the market makers from a different, or read the market from a different standpoint in the market makers' eyes, and how they're doing these things with the market, and how to avoid getting trapped in these false breakouts and stuff like that. So right here, this is the 5-minute chart, US 30. We can see this was a market open right here. Did push up, really initiated people to go long. A lot of people got trapped, and then we saw it kind of sell off. Probably a lot of people started to short right there, and then they got trapped in these positions, whether they're in buys or sells. So for the first like 30 minutes of the market opening, it was just consolidating. There was no overall move that happened. So with days like this, when you're not seeing a quick reaction like that, I like to avoid the markets till that time is over. So we can see that it did push up right here at 6:55. So after that candle closed at 7 a.m., a lot of people are long right here. And the market was insinuating that they were going to go long, but really they were going to go short. And this is exactly what happened. We saw this reversal candle right here at 7:05 form. Once that candle closed, that's when we saw the market started to drop. So with you seeing the market like this, a lot of people are like, all right, it's an uptrend, it's going to go up now. But realistically, what was happening is that was a false breakout. It was just getting people to go long to trap them in those positions, and then it started to sell off. So we had to make a note that this was our support at the time being. And this candle right here did break that support. So once we see support broken, you can either enter at the break if you have a sell stop right there, or you want to wait for it to hit a lower low, which it did right here, and then we want to find a lower high. So this was our lower high right here. This is where I would have waited to get an entry. But as you guys can see, look at how quick this move happened in the beginning of the market, and then all this time right here is consolidating, kind of just jacking around. And you don't want to be in markets like that when it's just not going in a real move. You guys want to see it have a quick reaction away from whatever zone you're entering on. So overall today was kind of a weird day, and Fridays can seem to be that way. Also take note that next Friday is going to be NFP, non-farm payroll. So I would avoid trading next Friday because there's going to be a lot of commotion in the markets. But as you guys can see, that really was what happened today. That's on the 5-minute. Let me go down to the 15-minute chart so you guys can see. And yeah, the 15-minute chart was looking pretty good too. As we can see right here is the bearish engulfing. Wouldn't call it a bearish engulfing because this candle was bearish, but it didn't engulf the body of this one. So once again, on the minute 15 would have been a better time frame to enter on, because on the 5-minute we had a lot of consolidation, a lot of candles that were adding up. So it's kind of hard to see. So what we want to wait for is that lower low, which we saw here, hit this psychological level of 33,500. Rejected that, bounced up, and then this is our bearish engulfing right here. We can see we have a bullish candle followed by a bearish candle, but take note and look, if I zoom in right here, look at the body on this candle, how the body goes lower than the open of this candle right here. So that candle engulfed the body of the previous candle, giving us confirmation that that was a valid lower high. This is where I would have executed a short if I still was in the market. It is a little bit later after my time that I entered, so I would have passed and I would not have entered on that trade right there. But if you entered, there you go, that's your setup right there. And you guys know by now that when I'm trading, I'm really looking for lower highs on a downtrend to enter or sell. And then for an uptrend, I'm going to be looking for higher lows. And that's how we're going to get the most optimal entry when it comes to trading, because we want to be selling high. We want to sell at a premium, and we want to buy low. We want to buy at a discount. So that's what all the market makers are doing. What they're doing is they're just loading up on orders right here. They're making sure they're entering sells at the highest point, so their stop loss is as closely as possibly can be. So that's the overall setup that I would have taken right there. I do want to look at the hour time frame too, because a lot of the time what we can do is look at the candle from 5 a.m. to 6 a.m. and that's going to give us an overall bias on what's going to happen from the 7 a.m. or the 6 a.m. to 7 a.m. candle. So right here, we have a doji, nice reversal candle. Then we have another bullish candle right here. And we can see that that bullish candle did come out. And then the next hourly candle just tanked. So it would have been a little hard to see on the 1 hour time frame. Also take note on the 1 hour time frame though. This is where we saw the rejection really did happen, because we had a triple top. 1, 2, 3. We had 3 hits to the high. And usually if the third hit right here is not broken, then that's giving us a good sign that it's really going to tank and go the opposite direction. So we have 3 hits to the high. The third hit doesn't even go as high as it did on this hit and on this hit. So every time that it hit, it went lower and lower and lower. And that's where we saw that very nice drop happen today. Let me know in the comments if you guys have any concerns, any questions for me, if you guys need any help. Also, reach out to me on Instagram. That is a platform that I'm on literally all day long. And if you guys need any help whatsoever, definitely reach out to me on Instagram. That's where I'm going to be at. But overall, today was a decent day in the markets. If you guys are new to my channel, make sure you check out my last 2 videos, because I dropped a lot of important information on timing and how it plays such a big aspect, or how it has such a big impact on the markets, and how it's overall going to help you guys out in the future. I hope you guys enjoyed this video. I'll see you on the next one. Peace out.